Now, Ashley, you're Scottish, so I'm tempted to ask you about the pros and cons of currency union and regional cooperation in the aftermath of the referendum. But in fact, I will resist that temptation. You're here today as the head of distribution for a Pan-African investment bank that's active in 12 different countries. You spend a lot of time talking to investors about their investments in Africa. Where do you see the best opportunities right now?
Well, before I answer that, Gavin, we actually had a very good chat about our perspectives on the Scottish referendum before, and I think we'll keep that off the record for now. With regards to the opportunities across Africa, we were a Pan-African investment group. We focused on the public equity markets, the private equity markets, the property sector, SME banking, and a bunch of others. My real expertise is the public stock markets across the continent. And to answer your question succinctly, I think in Nigeria being the largest stock market outside of South Africa, people are ultimately waiting for the elections next February, which President Mahama alluded to the incumbent President Goodluck probably winning. And I think we'll probably see a lot of investment come back into the country after that. We've seen the market run up very successfully over the last couple of years, and valuations are no longer as wide. There's no longer as big a discount as we saw previously, which is why larger emerging market fund managers haven't been as active in Nigeria as they were a couple of years ago. I think the Ghanaian story speaks for itself. With the Eurobond and with the IMF team on the ground now, we've seen the currency stabilize, and I hope that 2015 brings some better dollar-denominated opportunities for a number of investors. The banks that you saw on this panel are extraordinarily well managed: EcoBank, CalBank, and Ghana Commercial Bank. It's really a case of investors getting more comfortable now with the macro situation. With regards to Kenya, the market's doing very well, up around 14% this year. Investors have really, the banks are up 50 to 75% on the stock market. And that's really been driven by loan growth and their mobile banking strategies, which are coming through thick and fast. On top of that, other markets that aren't as accessible on the public side, Angola, looking to a stock market in the next few years, provides debt opportunities for now, which are quite attractive. And the likes of Mozambique opening up to oil and gas has got a lot of people excited, as I'm sure many of you are aware. So it really depends on your mandate and depends on what asset classes you can invest in.
Okay, Ashley, thank you very much.
Doing business in Africa. You can't afford to be without Africa Investor.